Hey, welcome to the Mortgage Minute for June. I apologize, I have not been keeping up on all the newspaper articles and getting Mortgage Minutes out to you recently, so there's lots of news. So we'll get right into it. Mid-May, the Globe and Mail had a series called Debt, Canada's Borrowing Binge, and had quite a series on it. This is becoming a very popular topic in the media, and of course, it's nothing new. We've heard a lot about Canadians taking on too much debt for a long time. Just going through some of these articles that they had, here was growing lines of credit spur warnings amongst banks. The rise of home equity lines of credit represented a seismic shift for banks and almost limited credit for consumers. Interestingly enough, the CMHC will no longer allow you to get a line of credit beyond 65%. So if your house is free and clear, the maximum you can get in a line of credit is up to 65%. So amongst all this clatter, here's one saying, in deep, the high risks of Canada's growing addiction to debt. Wow, and nothing like a little scaremongering going on here. And a different section, this is from the Globe Life and Arts, wasn't even in the money section. It says, is debt making you sick? So you can see there's a lot of talk around it. One of the things I was happy to hear they touched on here was financial literacy. That's a huge topic in my world because I think there's a lack of financial literacy in the high schools and children coming out of the schools. That's a different topic. But the point that I really want to make today, when you look at those headlines and you see all this talk about debt, the end result is going to be a tightening of restrictions and rules amongst the banks. So expect more of that coming down the pipe. In the meantime, I know I live in Vancouver. I'm not sure where you live, but for most of us in Canada, we're seeing a continuing onslaught of housing prices on the rise. Just recently, I think it was today or yesterday, somebody in Vancouver paid $1 million over list. It's just ridiculous. So we are right in the thrust of the housing market, the spring market, and my expectation is, especially in the Vancouver market, this spring market is going to carry right through to throughout the summer. And here's an article saying housing prices are rising, but growth slows. So there's a sense that in certain markets throughout Canada, we're seeing a bit of a slowing of that rise. Housing prices are still rising, but not quite as much as they did before. Although, again, that's across Canada, not necessarily Vancouver. In the meantime, articles are popping up about grim picture for global growth. Although we're seeing housing prices rise in Vancouver, on the global big picture, there is a slowdown in the global economic market. We're again seeing the rumblings of what's going to happen in Greece and the fallout in Europe, etc., etc. That led the IMF to talk to the Feds in the States and suggest they delay a rate hike. The Americans were absolutely primed to do a rate hike in the States, which means that if they do a rate hike in the States, how far is it until Canada would follow? It's interesting. Originally, back in March and April, the U.S. Fed, had all the conversations about doing a rate hike, and then recently, at the end of May, they changed the language. There is here it was a statement that came out late in May, and I won't go through all of it, but the gist of it was they changed the rhetoric, they changed the language, saying, well, maybe we're not quite ready to raise rates just yet. And in the meantime, as you know, when the Feds raise rates and the Bank of Canada raise rates, that affects your variable rate mortgage. The long-term fixed rate mortgages are controlled by bond yields. There was a massive sell-off in the bond yields last week, and I was watching that. You can't quite see this chart here, but the bond yields plummeted, and now they're coming back up. And I'm looking at that, and I see that on May 15th, bond yields were at 0.94. Today, they're at 1.07. That's almost a 20-point jump in bond yields. So look for the increase in bond yields to be followed by an increase, slight though it may be, in your fixed long-term rates. So what's the message at the end of all this is that today we have record low rates in the variable, record low rates in the fixed mortgages. Having said that, the Fed is threatening to raise rates down south, which will be followed by the Bank of Canada raising rates on the variable, and we're seeing bond yields increase. All these indicators would suggest we are at a historic low, rock bottom, fantastic time for you to consider refinancing, looking at your mortgage, looking at the renewals coming up, and saying, when's the best time for me to revisit my mortgage and potentially pay that off with cheaper rates today, refinance, etc. So if you have any questions about that, as always, it's a case-by-case scenario. Please give me a call. Go to peterkinch.com and send me an email. And that's your Mortgage Minute for this week.